Hi, it's David here with Futures Trading. I want to give you something else to consider while looking at the market. Uh, when you go to watch these next few videos, I'm going to make a series of them. They're going to be fairly short. All videos that I'm planning on making should be roughly about 10 to 10 minutes, maybe a little outside of that. So I'm going to try to explain the market within a matter of minutes to try to get you to get an understanding of what the market does and how easy it is to spot the opportunities. So I'm gonna show you. Let's not worry about the H's and the L's yet. I am gonna tell you what that is by the end of the video. But I'm gonna first just kind of outline what I've already kind of put in front of you, and in addition to the H's and the L's. But right now we're going to deal with market structure, and I'm gonna tell you how to read that just looking at the candlesticks. All right, so we're gonna try to do this roughly in about 5 minutes. So let's try to knock this out. All right, so we have the up, and I'm just kind of doing this from this range. You can go ahead and look back and see it too, but trying to do it from the range. So we got the push up here. And if you're stopping, because we don't know what's coming next, we don't know. We got, this first push, this second push. All right. So impulse, correct impulse. If you're new to trading, I'm going to try to use terminology that's more so geared towards you not knowing nothing about it. All right. So I'm going to try my best to just kind of keep it, very, very simple for you to understand. All right. So we got a push, push down, push up. All right. So now if you come down, you can pass this push here, just don't pass this one. That's two leg removal. You do not want that to happen because then they're going that way, So, all right, so then you push down, you push up, then you push down. All right, so now you can push essentially pass here. All right, now we're going to just kind of do this right here. You can push past here, but just don't pass here. And so they went up there and then they push past, of course, here, and we don't want them to pass here. The only problem is that now that you ran up here, you didn't want to even pass this, much less get past here. We're going to have to evaluate whether or not this can sustain itself. All right. So now it's trying to push up again because we have this leg here. We don't know what's coming next. Here's the push down. Here's the push up. It's attempting to turn from here. And yes, you could try that. You can try to grab that from there. You can and try to go back up. But if it comes back up here, this is a leg, this is a leg, push, push. You can pass here, you know, just don't pass here. Now, this is a very broad stroke of how I'm trying to, explain this to you, but it's kind of relative. All right. So now, when it pushes up, if it get past here, it's not really leaving you much, I guess much of a margin to know whether or not it'll turn around. If it get past here, it may just go ahead and get past this as well. And in this morning's video, I actually went over this happening here. We was like on this bar, and I said, "Well, we had a problem up here. It's chance." And this is kind of some of what I was showing you in context to the bar coloring as well, because I deal with trade size when I'm looking at trades. So, but just a plain chart. Here we go. Now, so then it turns around, okay, and they push up roughly at least 2 bars. You want at least 2 bars in your attempts. That's why I didn't count this. Now you can go micro if you want. If you want to do something like that, hey, get past here, don't pass that. If you want to do that, that's fine. Because it's all fractal and it happens in different time frames. So now they begin to come down, and of course they're honoring what's from above, and then they push down. Now you go push up again. Now again, we don't know what's happening. Of course, when you're looking at the market, and it's doing this. Them doing more than 2 bars back into the turn, okay, doing more than 2 bars back in the turn and then turning back around. And we really don't want a lot of them, but two is fine. Two is fine. If you're going to put this first leg out, okay, you can come past the first leg, just don't pass the second one. Now we're dealing with another scenario where the margin of difference isn't that wide here. So if they were to come back down here and pass this, there's a chance that they'll get past this. Now I've seen times, and any trader that's been doing this for quite some time know, at least with the NQ or the micro NQ, they'll kiss the back of the turn and then turn back around. So it's not that they can't come past this leg and still turn around from here. They can. You've been doing this for a while, and again, if you trade the NQ, you'll know that they'll bully you. They'll pull right up on it and just dare you not to get out. So try not to exit the position unless it tells you though, and that's the thing. That's the whole thing about trading. To try to change how you think. So there's the push up. All right. So now we definitely can say, hey, we got this leg, we got this leg. You took out, you took out this area here, and you took out this area here. There's a chance you're going to go higher, and it did. It went higher. Now let's take a look moving forward. All right, so this is that range. Okay, you can see the time right here, 6:15, 7:45 a.m. Eastern Standard Time. Consecutive closes. Now, if you haven't watched the other videos that I put out, I'll just briefly touch on that. You get a bar, red or green, doesn't matter. Whatever color your chart is. You just want to see two colors, I mean, two bars above the color of that bar or below the color of that bar, whatever that color is for you. Here it's just red and green. If they manage to do that, then that's saying that there's something going on here or going on here to keep it going in that direction. Now, the more they do that, the more it keep going. That's just broad stroke. All right. So now they're going up. All right. Now let's talk about the uh let's go at the 9:30. Let's touch it 9:30. Yeah, let's do that. Before I move on to the H's and the L's. Trying to make this really, really simple for you. So we have a high going into the 9:30, 9:30 about right here. So let's kind of use some of what I just went over here. We're going to do it here. So we got a leg down. We got to push up. Remember, we want roughly about 2 bars to make it, to make it worth anything. We want to kind of get 2 bars going. All right. So now we got more than 2 bars. All right. So now they push down again. All right. So we have this. We pushed up. And then we had the next move down. We just didn't break that low right away. We just didn't do that. All right. So then we came here. We lifted up again. Now you can pass this. Just don't pass this. That's a little bit of distance there. It is. And then they pushed down again, and then they lifted up, and then of course they broke the low. All right, and that's fine. Now, if you go broad stroke it, and let's do a little broad stroke here. So we got this, and then we just have all of this. Let's just do that. And if you do that, they poke their head right above, here on 9:30. They poke their head right above the first area. All right, so that's the first area here. Now, if you're going to go back down, don't pass this. Now, this is a considerable amount of a pullback if it's going to continue down. So that's why we can go broad stroke because remember it's fractal. It should be a higher time frame you can consider while looking at it as well. So with the fast movement, jump up. Let's clip the stops on this first rundown. What we're going to do about this? Well, you got a quick push back into this bottom, and then they came back up with it. Now, how do you read this? Because it's 9:30, and I know you're probably saying, "Hey, when it turns 9:30, they tend to do some real interesting stuff." So I'm just kind of section off this right here. All right, now let's matter of fact, let me get rid of all of this and then section it off. Let's remove that and let's section this area off. Just this little bit right there. Just that little bit right there. The thing that broke that low and what happened right at that pullback there or that 1 bar lift. Let's just section that off. Now let's pick it apart based on the micro side of fluctuations. Let's go, hey, they pushed down, they pushed up, they pushed down, they pushed up. All right. And you can break this, just don't break this. All right. Because remember, smaller time frames under us as well. I mean, this is a 1 minute. You can, think of it on more of a micro level. They came down, they broke, here, they broke that green bar from that. Yep, they tick right up under it. And then there's the lift. All right. So then they wind up popping up again, all in within just 5 minutes. I'm trying to do this as fast as possible and give you the information. All right. So there you have it. Now, that's structure. Just trying to restructure with just the candlesticks. 2 leg removal. You do not want them to remove the 2 legs. Really, really important. And again, you can do it on a broad stroke or try to condense the information. Now, the H's and the L's, they're kind of doing the same thing in some regard, but not quite. There's kind of a requirement that I'm putting in front of you when it comes to the H's and L's that it kind of play into where potentially a reversal is trying to happen. And you'll notice that the H's and L's are not everywhere. They're in specific areas. Okay. And all it is, it's really simple. Right here, we want that high, okay, and then we want this high, the second bar after it, and we don't care about whether it's red or green, doesn't matter. And then we want that next high to just all be lower. So we want this, this, this. Okay. Now, if we can get that going, all right, now it can be from the other side as well. That's the down. Let's do the up. So we can get this, we can get this, and then we can get this. Now, we don't care so much about what's happening with the top of the candles. It's the bottom of it that's significant. All right. So that's what we're looking for right there. That's what you're looking for. Now, if you're going to do that and you see that happening, you'll begin to notice. Now, again, if you don't know nothing about trading, this may be, again, really, really simple stuff to people that's been trading for years. And if it's not, then I'm glad that you may find this of any use. They went back up there to test it, and then they began to push down, and then they did it again. That's the real interesting part about it. Here we go. We're doing it one more time. And then they managed to drive themselves back up there. Now you got the little fluctuations in between. You see the H's and the L's in between. That happens. And then they gave it to you again. Now here they poked their head right outside of that high. Okay, they did. They did. And they came back with it. All right. Now, consecutive closes is important per bar, and that's what that is. I went over that now, the other video. I don't want to waste too much time here, but remember, that is what we're looking for. We can get just two outside the bar, whether it's red or green, don't matter. Well, this is a bar. From here to here is a bar on another time frame. So we want to see if they can, kind of put the consecutive closes above that high, but it didn't. So they're doing it again. All right. So here's the three. And again, it's fairly immediate. Okay. All you need is this guy right here, that guy right there, and that guy right there. They're trying to sell it. You can kind of see the momentum come in and then they drift down. And so that's what the H's and the L's are on the chart that you're looking at. All right. So I wish you all the best with your trading. Continue to follow the channel. I'm going to give you some information that's very simple, something that you can apply and immediately find it on the chart that's not too subjective. All right. So I wish you all the best with your trading. Take care.